Good morning, everyone, and welcome to the European crossover webinar. And we're still seeing the dollar ease back just a bit. It's trying to hold here, but we did move to the lows, and of course, correspondingly, we have the euro pushing back up to its highs. A moment. Cable also has made a run up here up to the 38%. Initially, that was my stretch for yesterday. Remember, in the morning, I think we did have that. If we did have as we actually had 30.34, and I remember talking about the 30.63 as a stretch because that'd be the 38%. But I've moved that up higher because I thought we might even push higher, considering how the dollar had lagged near the lows, and we could push potentially as high as up here to 30.91 here, 30.94. But we'll get to that. But still on the bid here. And you're trying to make a move higher. I did go and notate here is that we definitely, if we're looking on the euro on a daily, we definitely, if you're bearish, you definitely don't want to have this thing close above 1262 on a daily close here. Definitely not on that. That would change the complexion of this market, but we'll see what happens. We do have, take a look here. We do have FOMC today. There we go. Trying to access here with the calendar. Hang on a moment. Finally got rid of the countries that I didn't need. But anyway, at the bottom of the hour, we do have consumer credit, Bank of England consumer credit. We do have manufacturing PMI at the bottom of the hour, okay? And coming here into the States, ADP at 8:15 Eastern. Of course, I'm on Central Time, so it's going to show 7:15 versus 8:15. They're looking for 129,000 was the last one. Reuters poll for 180,000. Canadian market manufacturing PMI. That'll be at 9:30 Eastern. And also we have market PMI. Now, in ISM manufacturing, PMI. And then we do have FOMC. Let's go move this out of the way. Let's go and just move into the news. Yellow vests aim for May Day. Traditional May Day labor union marches will take place across Europe today, with continent's left-wing parties, which in many countries are undergoing something of an identity crisis, have received a morale boost from the election victory of Pedro Sanchez, socialist in Spain. In France, some of the yellow vest protesters are planning to turn the event into a mass protest against Emmanuel Macron's economic policies, which they see as a fueling inequality. In the end, Jeremy Corbyn's Labour Party last night kept its Brexit policy firm on the fence. Its draft manifesto for this month's European Parliament elections retains a second referendum merely as an option. Although the party's official line is this makes it the only party that represents both leavers and remainders, the news triggered a spate of tweets from pro-European Union Labour supporters declaring the party had just lost their vote. It's too early to gauge whether that will have a tangible declaring the party had just lost their vote, tangible impact on the Labour source in the elections, and whether it will benefit any of the three parties, the Greens, the Lib Dems, and Change. They are positioning themselves squarely on the remainder side. The next voter survey will be closely watched. And no panic on May Day, with many Asian and European centers closed for May 1st holidays. Apple's above forecast results and tonight's FOMC were top of the agenda for those still trading. Apple stocks rose 5% after the bell, after a beat lowballed expectations for the latest quarter, despite a record drop in iPhone sales. The stock was encouraged by a dividend increase planned for $75 billion buyback, but also decent revenue projections, greater use of Apple services, a recovery in iPhone sales on discounting toward the end of the quarter. S&P futures were in the black first thing Wednesday, after it eked out another record close overnight, even before the Apple report. Not only did Apple offset Alphabet's disappointment in the previous session, it underlined a surprisingly upbeat earnings season overall, where the fears of the annual aggregate profit contraction in 3 years are proving wide of the mark. Wednesday's news of a rebound in U.S. consumer confidence last month also chimed with last week's surprisingly strong first quarter U.S. growth of 3.2%, but is still failing to generate any alarm in a range of U.S. inflation and wage indicators released over the past week. The combination of brisk growth and low inflation is another sweet spot for the stock markets, taking pressure off the Federal Reserve after the policy either way now. Although the Fed is under constant pressure from the White House to start lowering interest rates again, the latest was President Donald Trump's calling for a rate cut off as much as 1% and a resumption of the quantitative easing. The first gross domestic product and the side of Wall Street back at record highs are likely to keep it comfortable with its current pause. The Fed may keep options open on its next direction, but it has little interest in guiding one way or the other right now. Of more interest will be how it responds to current tightness in the U.S. money markets and upward pressure on the effective overnight Fed funds rate, which has prompted some speculation it may cut the interest rates it offers, holding the excess reserves of U.S. Banks. While that may be a technical tweak, it raises a question over whether its ongoing balance sheet rundown is having adverse effects on liquidity. 10-year Treasury yields were lower first thing, and the dollar higher across the board. Tonight's decision and press conference. And in Europe, most of the continent's main focused financial centers were closed for May Day, but London is open. European stocks and bond yields ticked higher in Tuesday after a rare upside surprise in first quarter Eurozone GDP numbers, partly mirroring the forecast, beating U.S. and Chinese readings. Sterling also popped above 130 on Tuesday after reports of some movement in Brexit talks between UK and to PM Theresa May's government and the opposition Labour Party before tomorrow's Bank of England policy meeting and the inflation report. The pound held those gains and nudged higher. New Zealand dollar fell on Wednesday after disappointing local jobs data added to the expectations for an interest rate cut there. New Zealand dollar hurt by job setback. Investors eye the Fed meeting. The New Zealand dollar fell on Wednesday after week's job data added to the expectations for an interest rate cut as investors worldwide waited for news from the Federal Reserve Chairman Jerome Powell at the ending of a two-day policy meeting. Trading was thin with large parts of Asia and Europe off on holiday, and most currency pairs were trading within tight ranges. The risk for this Fed meeting is that unless the FOMC meets the market's dovish expectations for their stance, we would expect another leg left higher in the dollar, Mizuho's strategist said in a note. The euro inched higher against the dollar at 12.24. Strong economic data out of the Eurozone had pushed higher and prompted some short covering from hedge funds have been betting against a single currency in recent weeks. The big mover of the day was the New Zealand dollar, which fell 0.5% after government data showed employment unexpectedly fell in the March quarter, even as the jobless rate eased a tick to 4.2%. Markets responded by further cutting the odds on a rate cut from the Federal Reserve of the Reserve Bank of New Zealand, which has also stated that the next move was likely to be down. The RBNZ holds its policy meeting next week. The Kiwi was 0.4% lower at 66.49. The RBNZ appears to be ahead of other G10 banks in shifting to a more dovish policy stance, and this adjustment should should continue to keep the Kiwi toward the downward pressure in the near term, MUFG analyst wrote. The Australian dollar was little moved by the weakness in its neighbor, starting to extend its run this week to hit a 2-week high, supported by growing optimism that the ruling Conservative and opposition Labour parties can break the Brexit deadlock in the negotiations over how to leave the European Union. So let's go on and move on to the analysis. Well, I had the 1262. We know that's important for the daily. And that's also going to be right there where we're going to have our bias chart resistance up here to 1262, right there. So that will be our resistance. It's also key because it's daily. Support. If the dollar were to strengthen, if we don't do anything here and we turn around and start sliding back, it would have to be coming right there at 1183. And let's go move on to cable. Cable's pressing ahead now. And this is for the upside that I'm looking here. We do have some good resistance, here, but when cable, it did pull back, but we held here. If we're going to push higher, we're not going to take it out, I don't believe, by about 20 pips. So my guess is it would push higher. And when we see, looking here, one good area of some volume, not perfect, but comes in right there. We'll call it 3094. 3094 for a bit of a stretch, which would be about, about 38 pips from here. And it's going to be our old friend, the pivot. Now we're looking at a 2-hour chart, but if you look here on the daily, that's our old friend, the pivot, 2980. So it's interesting to see, because really what we talked about was a daily close below the pivot would open the door for us to move much lower. And we've really turned things around here. Now, we haven't completely changed the complexion, although we're above the pivot, but that's I'm looking for up to 3094. So the support on intraday basis will be the 2980, the pivot. And we'll move into the Aussie dollar. We did 70.91. I'm going to stay with this one, keep that there. The Aussie dollar definitely didn't move much. The 70.91 with support, we'll stay with that, 70.32. Now let's go move into the Kiwi. We had almost made it down to that support there, 66.24. Get that marked off. We had 66.50. That was, of course, prior to this. So we'll go with this right there. And there it is at 60. So 666.25. The upside would be pretty tough to run up there to 67.23 at this point. Let's go and take a look at it on the 2 hour. The 66.91. 66.91. We're still confined to relatively tight ranges, and the support would come in right there. 73.83. We had 73.89, so we're just going to move that a little bit lower. And resistance right there. 74.67. And let's go move into the dollar CAD, which has seen a pretty good little pullback here. We've moved into this 33.83, 33.82. We were looking, the market out we were looking, I'm saying is as it drove lower and pushed lower into late in the US session, I was mentioned to one of the gentlemen that was so short, he'd actually covered, I think he got short from around 34.40 or 50 and covered. And we're talking about there was some good volume coming in at 33.68. And that's what we're going to go with for our bias chart support, 33.68 on the dollar CAD. Resistance can be 34.15. Just the one, it looks like it's really going to break lower. It just kind of falls back on its face. Let's go and move into the dollar peso. This one still remains all over the map. But the time it looks like, we talked about that here too. Saw this thing slide back in here. Um, right there. 1888.5 for support. This is all over the map. This is a little bit tougher. If we get the dollar rip up here, it's going to be right there. 19022. Right there's going to be resistance 1166 for the dollar yen. With May Day, a lot of these ranges is relatively quiet, so we're just flying through this to a certain extent. We had resistance at 1119. We've been as low as 1123. We'll open that just to slide a little bit lower down here to 1108. Look, actually, just a little bit lower right there. 1105. So hold on. We had our support here. That we had a bias chart yesterday, looking for a move down to 97.34. You wonder with the FOMC if they can move that a little bit lower. Probably not much. Key right here is actually 29. It's not that I don't think that the 34, it's just if you hold here, okay, you're holding here. Look, and it's not like as if these are, you look at these bars, it's not like as if these are 10-minute bars. These are 2-hour bars, okay? So it got as low as what, 45, and it rallied up to what, 54. So it rallied off of this low here, 9 ticks. Okay. So if it's going to test those lows, do you think it's like the same idea that I talked about the cable? So if they're going to break low here with only a 9 tick trading range, okay, from bottom to top, if they break low and hit the stops, it wouldn't seem likely that they're just going to stop 12 ticks later. That's why I think that they could push a little bit lower here and it'll be 97.28 then. That's why we're adjusting it lower here. I think that 97.34 would have been a good area on the first stab lower, or here we try and hold it. We break lower here. But as this time frame stretches and we've rallied a massive 9 ticks, then if they're going to break them lower, the market's not going to say, oh, well, we'll stop after 12 ticks. I wouldn't think so. But we'll see. But like I said, so that's why I'd go with 97.28. That's my thinking there. Upside, tighter ranges, 97.81. Well, we've been as low as, look here, 1278. We're going to keep this here, this 1279. Well, actually, we'll just move it $1 lower. No big deal. It's held overall. And the upside, we'll keep this at 1296. Let's go and move on to the cross rates. Well, this is certainly broken lower here. When we had that 8620. There's some support here at 85.90. You think they might be able to push stab a little bit lower? And that'll take us right in here to 85.77. Resistance, 86.23. Moving on to the euro yen. I still like this 25.45 here. So we'll stay with that. Support that will move that up to here, right there, 24.81. This made it right into our bias chart resistance 59.37, and then we dip back. We're going to go and keep this resistance for now, 59.37. But we'll just move this support a little bit higher, 58.65. Well, in that Euro New Zealand, made it run all the way up here to the 78%. Now that was a pretty good move. The 78%, that's actually going to be resistance 69.04, or call it 69.05. And support will come in right there at 68.19. As I said, we're flying through this because we're relatively quiet session with Mayday. And onto the Aussie yen. We're going to retain the 79.03 right there. Keep that there. And on the support, same thing here on the support, 78.30. We're going to keep that here. So very relatively tight ranges here for the Aussie yen. And sterling versus the yen. Let's see here. %78 comes in at 45.78. And we'll get a little bit of room here. Let's go with 45 right there. 45.98. 45.98. They're called 45.90. It's 45.97.7. So call 45.98. Support will be right there at 45.19. Right there. You'll go for resistance right here at the 61%. That's going to be 85.73. 85.73. Support's right there. 84.52. We'll keep that here, 83.52. And support coming in right there, 82.94. Let's go to 83.52. So there's the bias chart. We're really good, very, very quiet here. Cable's the one thing that can move, is the one thing that's moving here. Now we got a resistance right here, 30.94. And if you're looking at the euro dollar, you don't want to see, if you're bearish, you do not want to see a daily close above 12.62. That would change the complexion. I'll go and get this posted in the room. Obviously, it's very, very quiet because of May Day, and we'll get this posted in the room, and good luck. Thanks for joining us here on a very shortened crossover. Like I said, not a whole lot of activity because of the May Day. Thank you.